Stitch Fix, rough drop. Check it out, earnings was on the 1st, and as of this recording, price is down almost 40% since then. Ouch, that's difficult. So what's going on though? Do you need to be worried? Well, that's what I'm about to explain in this video. So on August 4th, we published a video on this channel talking about how bullish we were on Stitch Fix. And from that video, the stock rallied over 80% to its high. And by the way, if you haven't seen that video, I'll link to it above. Go watch it real quick. So people were real happy, you know, they thought I was a genius. So thank you, but I'm not. But then as it always goes, eventually the trend changes, and now we've seen the ugly other side of it. And this latest huge drop happened after earnings were released. But what changed? Well, what happened? Well, Stitch Fix underdelivered. Analysts were expecting 2.81 million active clients, and Stitch Fix only gave them 2.74 million. They didn't meet what the analysts wanted, and as you can see, they were severely reprimanded for it. So is the stock trash now? Should you be burning your Stitch Fix packages? Well, no, I don't think so. The numbers are still great. They're growing revenue at over 25% a year, and they've doubled their free cash flow. They're also spending less than 10% of their revenue on advertising, so they've been able to capture that rare organic growth. And that's why investors shouldn't be worried about a small miss in active client growth. Stitch Fix is being smart, and they're not needlessly burning all their cash on client acquisition like most of these box subscription services do. You do not want them going down that route. Stitch Fix is actually profitable as they continue to expand into new markets, including their first foray into international markets where they're opening up a subscription service in the UK. You know, this is one of the few sustainable subscription companies. They're really solid. So then what caused the huge drop then if the earnings were actually okay? Well, if you look at this stock, it's rallied over 180% since June. That's 180% in 4 months. So you should fully expect the stock to have a big retrace like the one we're seeing right now. That's naturally what happens when something runs up so fast. And go back and study Facebook, Amazon, Apple, any of those high flyers. All of them had retraces just like this one, and even bigger retraces actually. And honestly, the earnings themselves in this case didn't matter too much because the market was really just looking for an excuse to correct. Earnings are really just like the last random grain of sand that pushed Stitch Fix over the edge into a natural correction. It could have easily been something else. It didn't have to be earnings, just any news event really. So we wouldn't be surprised to see Stitch Fix fall even more here and then chop around for a while before building a base and then resuming its bull trend. How should you play this then? Well, I don't know. It really just depends on your strategy, which I constantly say over and over again in these videos. And it's not just a cop-out either because it's the truth. So if you're a shorter term Momo trader, then yeah, the momentum in this stock is probably dead for a while. And hopefully you were selling on the way up. So that way you wouldn't have lost all your profits during this drop. In our macro ops portfolio, we pay attention to momentum, but we also put a lot of weight on fundamentals and holding a stock long term. So in our case, we're holding through this correction. And we also sized our position small enough so that a drop like this doesn't destroy our portfolio. And it's also worth mentioning, just because this is such a good example, just how dangerous earnings can be for high flyers like Stitch Fix. You gotta make sure that you're doing some trade management around those earnings dates, or at least have a risk system in place so that you're not blown out when you see a terrible drop like this. Now, if you enjoyed this video and want to see more, then make sure you subscribe to this channel and hit that bell for notifications of new videos. We publish about 3 a week, all stock market and business related. So subscribe, and I'll see you in the next video. Stay fallible out there. Bye.